gentlemen, I would like to welcome you on behalf of Arab Advisors Group to the Electronic and Mobile Payments in the Arab World Conference. Our appreciation goes to Her Royal Highness Princess Sumaya bint Al-Hassan for her continued support and vital efforts in advancing the ICT sector in Jordan and the region at large. This conference takes place at a time when the e-commerce payment dynamics in the Arab world are undergoing deep changes. This is mainly driven by increasing adoption and awareness of online banking and e-commerce, coupled with changing patterns of consumer behavior across the region. Consumers are getting more comfortable with e-commerce and m-commerce, and the demand is met by a rapidly growing supply of homegrown companies as well as global and regional companies across the region. The shift in consumer behavior from the physical marketplace to the virtual one was met with an evolution in the payment methods used. Although the Arab consumer is still somewhat wary of security issues, we are now seeing gradual shifting towards the alternatives offered by banks, payment networks, and telecom operators. Electronic bill presentment and payment solutions are emerging in the region and driving people away from cash on delivery and cash on order. And operators are pushing mobile money solutions in their respective markets. The future for electronic and mobile payments in the region is quite bright. In addition to the continuous uptake of the solutions available in the market, new technologies such as wearable devices offer a plethora of technological foundations in which new business models and consumer-friendly solutions will be and can be introduced. Please allow me to thank the sponsors for this conference for their support and trust: EMP, Housing Bank for Trade and Finance, and Umniya. Allow me to also thank our supporters, including the Central Bank of Jordan, Association of Banks in Jordan, Aladdin Exchange House, and Aramex. Ahlan wa sahlan to this conference, and without further ado, I would like to ask Mr. Paul Edwards, Executive Chairman of EMP, to give his keynote address. Please, Mr. Paul.
Well, thank you very much, Jawad. A great pleasure to be here. So to all the distinguished guests, Royal Highness, Excellencies, media, and of course all of our friends here from all the various sectors who have an interest in electronic payments. I'm going to start very quickly by looking at the global situation as regards payments. We'll then look at some of the key trends that are affecting the industry. And then lastly, we'll focus a little bit more on Jordan and the Middle East as to some of the key initiatives that are shaping the payments industry in this part of the world. By the way, EMP, just so you know, those of you who don't know, EMP is apparently the largest Pan-Africa Middle Eastern payments player. We have 130 bank customers in 43 countries. 30,000 merchants, and more recently we've expanded into Afghanistan and Pakistan, so our reach is increasing. So we have a very strong interest in how the payment trends around the world are shaping. So first of all, and I should have found out where the button is before I stepped up. On the keyboard. Aha. That is logical. So the payment industry, after the shock of 2008, the very good news is that the payment industry on a global basis is increasing quite well. After 3% growth, it kicked up to 6%, and now we're looking at about 8% expected up until 2018. So that 8% will mean that the industry as a whole will reach around $2.3 trillion by 2018. And at that stage, it'll account for about 43% of all bank service income. And that's an increase of from 34%. So it is having a much more powerful impact on the banking community. The Asia-Pacific region, as expected, is continuing to be one of the key drivers, accounting for over 40%. And we're seeing that cross-border payments and trade financing is increasing as well, around about the same percent, about 8%, as the world economies start recovering. Now, there's some very important things in terms of trends. The continuing digital transformation of merchant payments, for example. The rapid adoption of smartphones and tablets is leading the convergence between the offline and the online world. and that's having quite a profound effect. In America, 7% of merchants now say they're using their mobile phone to accept payments in place of a POS machine. And they believe this will increase to 29%. So we're seeing a lot of changes in the merchant acquiring environment. We're also seeing, in terms of the market becoming a lot more savvy in terms of using data and information to drive trade and transactions. A lot of the banks were very, very good always traditionally at using their skills in analytics in terms of areas like fraud and risk management. But what we're seeing now is there's a lot more attempt to broaden the scope and access broader ranges of information, for example, even from social media, and incorporating that into bigger pools of information, which allow banks to be a lot more specific in who they target. More recently, Chase and Visa tied up to do this, and also Bank of America and Cardlytics have created a merchant-funded reward program that taps into consumer data to generate much more targeted offers. So you're going to see a lot more smart data coming into the process as people are fighting more and more to get that consumer dollar spend. We've also seen advent of new technologies such as non-card real-time payments. We've seen in Australia the new payments platform, in the UK the faster payments platform, and in Singapore G3. And what this means is that low-value payments are facilitated and are credited almost immediately. This is going to spur on a lot of new innovations and help this move towards more electronic payment format. Now, there's also, as I mentioned, rapid growth in digital transformation in cross-border transactions, and customers, we believe, are seeking more transparent cross-border commerce solutions. But for banks to really capture this growth requires them to understand the shifting trade flows and increasingly complex web of regulations. We're all familiar with KYC and AML, but we are at risk of strangling growth, I think, if there are too many regulations inhibiting growth. But what we are clear on is that payments will be the cornerstone of the next phase of digital banking. McKinsey, who I've drawn from here, has forecasted that more than 50% of incremental revenue in almost all banking products in Western Europe will be digital by the year 2018. So the challenge is for banks is to get on board, all players, in fact, merchants, banks, anybody in the ecosystem, to understand what customers' needs are and how their behaviors are evolving. We know that the new generation exhibit very, very different behaviors and draw information from different sources. And in fact, do not trust traditional institutions just because they're traditional institutions. So we have to adapt our understanding and our business models to really to reach out to the new generation, who are, of course, very techno-savvy. Now, what we're seeing also is that one of the key trends is this war on cash. Now, I think it's a war because cash is an inhibitor of strong economic growth around the world. I've mentioned there that cash places a heavy burden on emerging economies. It's been estimated that handling cash, can consume as much as 1.5% of gross domestic product. It wastes everybody's time, consumers as well as those of us on the other side, and the technology now exists to make a dramatic move towards electronic payments and so increase the efficiencies in our economy and productivity. Now, if we were to look at percentage of payment transactions that are still cash, you'll see, unfortunately, there's a very, very large grouping of countries that are still in the very high 90s, that are still reliant on over 90% of transactions. These include Morocco, Egypt, Nigeria, Russia, even South Africa, which is seen as fairly evolved in the Africa-Middle East context, and India. Interestingly, you'll see Brazil, which is an emerging market, but has actually, through very concerted efforts, moved quite far down the curve, not far behind the UK, obviously Australia, US, Canada leading the charge there. But if you look at, this is an interesting breakdown because it shows the percentage of consumer payment transactions done using non-cash, i.e. electronic. And you'll see countries like Singapore leading the charge, Netherlands, France, up there in the 60s and the late 50s. But interestingly, US, still only 45% is non-cash, which may come as a surprise. And Korea, who we expect to be a leader in all things modern technologies, is sitting down there around about 29%. But on the right, you'll see the emerging markets, our percentage is extremely low. Even the UAE is sitting only at 8%. South Africa at 6%, Russia 4%, India 2%, and Saudi Arabia 1%, and Egypt 1%. So we have a long way to go to realize our dream of having highly productive and efficient economies using electronic means to support payments. So this is a similar curve, but again, it shows this curve swinging up. But what's interesting is that it really defines the difference between emerging markets and developed markets. Because all the emerging markets largely are grouped on the left, right at the low end of the curve, and the developed markets on the right. So if we want to drive our economies strongly, this is a key war that we have to wage on cash in the future. And the benefits, as I've said, will be very, very significant. Now, I spent a long time in telecommunication and ran what today is one of the largest telecom businesses in Africa and I think fourth largest in the world. Interestingly, starting in the early 2000s in Africa, particularly where I was involved, the curve was exactly like that. And penetration was in the low single digits. Today, penetration of telecoms is in the 60, 70% range. So there's no reason, in my opinion, as to why the adoption of financial services and electronic payments will follow that similar curve. And you can imagine the effect if we take it from single digits to 60%, the profound effect that that will have. So one of the tools that we're going to see, I think, increasingly important in this drive is the role of mobile money services. Now, we know that a significant number of people in the world, 70% of the population of the world, are utilizing mobile phones. And we've seen that smartphones have increased their penetration from about let me get this right, about 3% in 2007 to 25% by the end of 2013. Obviously, that'll be even a lot higher. It'll be in the 30%. So we have a population. And by the way, in Jordan, I think if you looked at SIM penetration, it's over 100%, and possibly unique would be 60, 70. So it's you can see. So every one of these individuals really is competent to be using electronic payment methodologies. So our job is to target the 26% of people in around the world in emerging markets who do not have access to financial services. So, and that's, by the way, amounts to a number of like about 2.5 billion people around the world that do not have access to financial services. So if ever there was a number that should make us really excited by the opportunities, it's that number. So mobile money is a very powerful way to drive adoption of electronic payments. We saw in Kenya with M-Pesa, nearly 20 million adults are now utilizing M-Pesa to make payments. And that's a phenomenal success. But it hasn't been replicated everywhere. In Nigeria, for example, they licensed over 20 mobile money operators, but the market is fragmented and has not achieved what Kenya has done.